Hey everyone, let me know that you can hear me. Awesome, we'll get started here in just a couple minutes. Thanks for showing up tonight, folks. One minute. Welcome to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we are live. I do have plans to go through some stocks. I'm going to do them at the end, going through my normal flow. So let's go ahead and get into what I want to talk about tonight. There's a number of things that are going on. We saw a follow through yesterday. If you recall, 2 days ago, I talked about that cycle bottom was coming in. Thought we'd have a bias to the upside, maybe get to an R2. We went almost to R3 today, so we definitely had that type of action, and the markets are acting pretty well. And I saw a comment just a minute ago, so much for COVID. As I told you last night, this was not about COVID. This was really a 3-day decline. It extended a little bit below some of the support levels that I was looking for, but it rebounded very sharply, and we know the rest of the story. So I'll go through all the details here in a few minutes in the technicals. But we look back on yesterday, S&P up 0.8, NASDAQ up 0.9, Russell up 1.8, and I'll be covering the Russell tonight. The rebound in the Russell is starting to look interesting. We had a 3% day yesterday, another 1.8%. So we're definitely seeing that type of pattern that is suggesting there's a reversal low. It came off a key level. I talked about 2120, 2100, exactly where this thing reversed from. Long ways from setting up a new uptrend and any excitement. And in fact, that we're a ways away on all the markets yet. But if we come into today, we have on Thursday, we'll have claims coming out expected to show 355,000. That's going to be an interesting number. I don't know how that will come in. I still think there's going to be some softness in the employment areas. Continuing claims at 3.23 last week. I've been talking for months about this 3.2 level. If we get below that, once we get below that, I'll discuss that tomorrow night if those numbers come out that way. It's really kind of sketchy the way the employment numbers are coming in right now. It's very interesting. I'll go into that in more detail if we see those numbers come out. We also have LEI, which is leading economic indicators coming out, expected to show 1% increase. Not really a lot there. Probably the more material things that are going to be coming out is we've got 132 earnings reports. Intel, that's after the market close. Abbott, let's see here, Union Pacific, that's going to be watched pretty close. That comes out before the market open, so that'll be interesting. Also, AT&T, somewhat watched. I mean, it's a big company. It might have some relevance. I really don't think it does in the current market. The other thing that we saw, just going back to today's action, the other thing we saw is that 10-year rebound. I told you about that cycle low there as well. We had a cycle in the S&P. We had a cycle in the 10-year, and boy, did it bounce back. We printed 130 intraday. We closed at 128. Plenty to talk about there. The rates didn't belong at 1.4. That was just kind of a, as I mentioned last night, virtually every hedge fund from here to China was short the bonds, so they really just panicked and blew those off. So that's setting up an interesting pattern. I'll also cover here in a minute in the technical area. One of the things, just keeping on the bonds for a second, is one of the things that I've talked about. I know you folks have been watching me for a year or so, a lot of you. I've been talking with our institutional clients for a long time, probably the last 2 or 3 years, or maybe even longer. It's kind of an old story. But one of the things that I continue to talk about is we are one, not 10, but one bad bond auction away from disaster. We saw a really soft auction today, and that had a lot to do with how the 10-year traded. It was a 20-year bond. It was the coverage was very sparse. And if we ever miss on a 10-year security, that thing is going to set the tone for multiple days and probably weeks of higher rates if that happens. Because what that would indicate is that the U.S. is having trouble, are starting to have trouble getting people to come into the auction. Now, we've seen just the opposite of that. I'm not predicting that we're going to see that happen, but we certainly saw a soft auction today. If we had a bad auction would be that we didn't cover the bonds at all. Usually there's a 2 to 3 to 1 coverage on every auction, and if we were to come in below 1 and we didn't cover an auction, that would be, the bond vigilantes would be out in force, and you would see things that you don't want to see. I was talking just the other day, just a really quick story here while I'm on this. I was talking to somebody the other day, and in 1980, I was in California. I worked at a company that was called Shearson American Express. It's now, it turned into Smith Barney, that turned into Morgan Stanley. But we were sitting there in Hibernia Bank of California. There was an S&L crisis in 1980. There was a run on the bank, and there were 100 people standing at the front of the bank trying to get their money out. Money market funds had actually dipped down and were worth less than $1. Now, we've seen that happen going back to the '09 crisis. It's happened other times. But it was a big run on the banks. And during that time, the auctions were really tough to cover. We got coverage, but we were lucky sometimes to get 1.5. And that's when interest rates were all the way up at 16%. So I started in 1979. I've watched interest rates go from 16 to 20% to zero, basically. And so I'm just telling you this story because this auction thing is a big deal. With the massive growth in the sovereign debt, it just gets scarier every day. And if I were to call for a black swan, that's where I would watch for. I wouldn't look at more of the obvious parts, but if we saw something like that, that would be a big event for sure. Yesterday also, just going back and just continuing to talk a little bit about yesterday, as we saw financials and energy. You know, we saw energy rebound. Energy stocks were up 3.5%, the sector 1.7% in financials. I still don't think that energy trade's over. I'll cover briefly the crude oil tonight, so I'll definitely get into a lot of these details. I'm just looking at my notes here, make sure. Yeah, I'll go through here in a second, but we did see some traction on the database. Not totally impressive, but not too bad. So let's go ahead and start to dig into some of these numbers and see what they look like from that standpoint. So looking at the daily database here, we're up to 32.77. We were at 28% yesterday. We had 1,216 buy signals with 124 sell. So we had definitely a buy-sell ratio, pretty positive. Magic number, you folks know, 42%. We're a ways away from that. And we're just seeing this thing waffle. And I talked about this the other night. Between 44, we got up to 48%, back to 27. Here we are back at 32. So we're just seeing a rotation in these markets. And as far as the short-term patterns go, what this means, all it means is that the breadth of the market is very narrow on a short-term basis. On a longer-term basis, when we go to the intermediate models, we are actually around 65% of the symbols in a database are still long. That'll be interesting as we come into Friday to see how those play out. But you can clearly see here that the 32.77% bullish is the number where we're at now, and we're going to need to get back above 42, and I expect to just see this thing go absolutely sideways as we kind of rotate through the rest of this week and coming into next week. All right, we'll get into the S&P here. S&P is up 2.25 overnight, basically flat, 43.52. I talked about yesterday, like I said, that I thought we'd get back toward the 10-period moving average because of that cycle low that we had, which is right where I've got my cursor here. That second dot was the cycle low. We got a nice reversal, follow through yesterday. This is looking at the futures right now. And what we're seeing here is that we're back above the 10-period moving average. It's interesting because the PPM1 has penetrated back through its first derivative. PPM2 is kind of flat, trying to turn up. There's not a lot of upward momentum here. I think what we're going to see is what we've seen in the past. We get these reversals, we get into the market grid, and we start to find a lot of resistance overhead. We look at the grid for today. You'll see that right now the overnight low is 43.51. The high's been 57. R1 is 43.67. S1 43.33. We also have the 43.40 level, which is the 10-day moving average. And I believe that this configuration is going to be very similar to what we had earlier when the market moved up into the grid. We saw an expansion going back here around 623 on the futures, and then we just kind of went sideways. It's likely that the same thing is going to happen again. We're going to get up here just a little bit more, maybe start to play with the all-time highs. That's 43.83 on the futures. We may get up to those levels, but just looking at the grid for today, we're looking at 43.87 as R2, so that would be enough to print up toward those highs. Does it mean anything from an overall basis? I'm not sure. Like I said, just reviewing the database here a minute ago, is that we really don't have a lot of traction on a lot of symbols, so we're still being driven by a very few stocks, and that's been the story all the way up, going all the way through. June was a very narrow market. We're continuing to do that. We're seeing volume drop off quite a bit right now, which is pretty typical after a couple of days surge. Volume was off by about a little bit more than 10% yesterday. So I think that is going to continue to see this kind of die off, and we'll start to flatten off a little bit. We may possibly trade into an all-time new high, but I don't see the big breakout coming from this level here right now. As expected, just a quick mention here, the infrastructure deal was blowing up in the Senate today. There's no way they're going to get any of this stuff together. So everything's still operating on the 2017 tax cuts. Everything's still operating exactly how it was a year ago, from the structure of taxation to the markets. Nothing's changed from that standpoint. So anyway, let's go on to the SPX. Similar patterns. As I mentioned, we do have the reversal yesterday right on the cycle. Follow through, we're back above the 10. 43.44 is the 10. I thought was stall right around this level. I'm okay with what's happening from this. But same kind of thing. We go to the market grid for today is right here, S1 43.45, R1 43.76. So we could get an S1, R2. I don't think we're going to see expansion on the downside, but if we did, we would see S2, R2 on this chart as far as that goes. So as we look at this overall pattern that's happening here, we've got a decent slope, but we're below the first and second derivatives on the PPMs. There's just not a lot here to really hang your hat on as far as a breakout in a trend. And we've had this issue going back into May, really. We've seen a couple of times where we printed an ATH, an all-time new high, and then it just backs back in again. I think we're still in that same choppy pattern. It's got a slight upward bias. I think that continues, like I said, in the last couple sessions, and probably going back to last week. There is no major top forming here. This is just a lot of chop here, and the stock selection that you use is going to be more important than trying to trade these indices other than a very short term in and out is going to be tough. There's really not the trend there. I think I made that point. Next market I'll cover, let's go to the NASDAQ. It's interesting because the NASDAQ got an exit, but it actually got a buy signal on tonight's open from our model standpoint. So that's an interesting scenario. And I've talked about this for, I don't know, it's getting to be an old story, that the NASDAQ's configuration has been much stronger, and that's reflected in the spreads. The last couple days, Russell versus the NASDAQ, the Russell's clawed back, but it's basically a joke when you look at the spreads. I'll show you in a minute. They've made headway for a couple of days, but it's not really a trend of yet. I think there's maybe a bottoming pattern where maybe we will start to see some things. I'll show you when I go through the Russell here in a minute. But the NASDAQ has that upward slope. The key number to look at is that 21 period moving average, 14,685. We look at yesterday, the low 14,668, 14,666 was S1. I talked about this last night. S1 possibility of maybe getting R2, but it was an S1, R1 yesterday as we look at the grid. For today, we look at this. I think we have a similar expectation right now. The low's been 14,826, S1 14,774. The high's a little bit above R1, so look for an R2 possibility. We're going to start getting back toward that 15,000 level on the futures again. And so S1, R2 is probably the realistic expectation for today. And that would be for Thursday. I do want to show you this chart here. It's a little bright. I usually stop using the white charts, but I want you to see this. This is the Russell Weekly. This is the futures. And I talked about this thing printing down. This 40 period moving average here, I mentioned this a couple nights ago, is a huge number, this 40-week moving average. We bounced right off that, got a nice reversal going here. So what really is setting up, I don't have the market grid, I'll show you on another chart here, but what's really setting up on a weekly basis is that this thing is really still in a major consolidation range. This is not necessarily a bullish pattern. If you tried to put some Elliott wave on here, it's a very complex fourth wave of some sort. It's definitely a fourth wave, so there's more to it. And we go back to the modeling on this on the futures on a weekly basis. The last signal that we had on this thing was 1,488. So it's been long since 6.5 a year ago, and it continues to hold into this pattern based on what's going on. So let's go over and take a look at this on a weekly basis. Like I said, what's also interesting here, this is the daily Russell futures. We got a buy signal on the Russell tonight on the open. So we're seeing a 2234 level after this reversal. PPMs are at least penetrating. PPM 1 and 2 are looking pretty good, and 3, it'll take a couple more days. But this is encouraging from the standpoint of what's going on with the small caps. Let's take a look at the spreads just for a minute. And I put together just so you could see it. It looks exactly the same. This spread in the middle here, I'll open this up. This is the Russell cash versus the composite. And you can see, like I said, we've outperformed for the last couple of days, but this is still in this massive downtrend here. We're really not getting any type of action there to go off of anything, actually. And I wish, I know you folks have said before, I wish I could get my cursor to turn, it's white on my screen, but it doesn't show up on this streaming software the way it looks on my screen, unfortunately. But this trend is definitely down here. I'll move this. This trend is not turned around yet. Maybe we've hit an extreme and we'll set up some kind of pattern down here, and then maybe the leadership change could start to move forward. I'll stay on top of that. It's a key element of things that I'm looking at here. So the next market I want to go to is the 10-year notes. And as I mentioned in the opening comments, the 10-year traded down yesterday, right on that cycle low. It traded all the way down to 1.128. So basically 1.3%. Rebounded all the way to 130, actually 1.303, and we closed at 1.28. I believe with the PPM starting to turn around like this, that we're going to see more consolidation. We should get back above the 200-day moving average. I talked about that a couple of days ago. This is going to be your support line. We rebounded back over it. So we'll see what type of action we get here in the next couple of days. Just a quick look at the weekly chart. And I think that's also important to take a look at. And that is, as we look at the weekly, we're right at the 40-week moving average. The PPMs are all negative, and I talked about that. So the absolute best case for this thing right now is for a sideways range to set up a rebound back toward the 1.44, 1.42 with the bottom here at right about the 1.25 level. And I talked about this last week, that 125 to around 142 is going to be the range that we're going to stay in. We spiked down to that 1.13, but it didn't stay there long, as you can see. So this would be interesting. But the PPMs here are suggesting that we've entered into a pretty decent downtrend, and it's going to be interesting to see if we can set up any kind of patterns here that are going to represent a bottom, or whether we're going to set up a continuation pattern and there'd be lower rates. Now, a lot of folks have talked about this as indicating some kind of deflation and all that type of stuff. I don't think that's the case. I think, if anything, there are expectations building, and I've been talking about them on this channel for a couple months, that employment and some of the economics aren't going to be easy as we come into the end of Q3 and we get into Q4. So that's definitely going to be an issue there. So the final market that I'll talk about in this sequence, and when I finish this, I will go into and we will discuss a number of stocks. I'll tell you which ones we'll go through, and then I'll take a couple questions and we'll end the stream tonight. As I told you last night, this stream will be a little longer than the last couple. But if we look at the weekly gold, we're at 1801.90. We continue in that sideways range. I have no expectation for gold to do anything but stay in this range for at least another week or so. And we're likely to see maybe down to 1794 would be the extreme possibility of getting down to one more tick below that, down to 1783. But I think we're going to remain around this 1800 level, below 1820 to 1824. So I'll just come up on screen for a minute, and here's what the plan is for the rest of this stream tonight. Is I'm calling it 6 at 9. I'm going to do 6 symbols that I picked out of some of the requests that you folks had. I want to make sure that I cover at least these. There were some pretty good ones. I looked at some of the patterns and can understand why some folks are requesting some of these symbols. But I'm going to cover Apple, Tesla, Alibaba, GDX, which is the gold miners index, Boeing, and I'm going to talk a little bit about what's going on in airlines, because I think that's important. And then I'm going to do Caterpillar, and possibly we'll see how the time goes when I get through this, that maybe I'll take some other requests. But for right now, that's going to be the plan. So let's go ahead and get into that. And I'm also going to cover Bitcoin after I get done with those, Bitcoin and Ether. So I will get to that. So make sure you hang in there. So it's interesting as we look at, I'm going to use the weekly charts as we go through these symbols. And Apple has a pretty positive trend on an intermediate basis. We see the PPMs actually accelerating, PPM 1 and 2, which is good. But it looks like to me, I reviewed the daily symbols, the daily patterns, and they suggest that we're likely to go into a slightly sideways pattern. I think I've talked about this pattern here. It's kind of a flat pattern on the market grid. We typically will stay within the grid, usually within an R2, S2 as a broad range. This is a weekly range. So this week so far, we've been down to S3, which is 141.65, 141.67. So if you have the market grid service, you already knew that number was on the weekly grid. And right now, the R1 is 147.86. We got to 147.10. So basically, I've done an R1 S3 for this week. I think as we come into next week, we'll continue to see just working this range, 141, 147, maybe printing up to 149. We're just in the sideways range. It's interesting that Apple didn't really participate in this big rebound in the last couple of days. So look at Tesla next. Tesla was down slightly as well. These are two stocks that normally are going to participate in these rallies, and they didn't today. But Tesla's interesting. We've basically just got a cluster of all the moving averages in the same place between 634 and 653. We're trading at the upper end of this. Looking at just the grid for this week, the low is 621. S2 was 619, so pretty close to that. On the upside, 664. R2 was 668 and change. So we're basically working within this range. And the positive thing that's happening here with Tesla is we're starting to see the PPMs move up. We also had this cycle event several weeks ago. Even though we've drifted sideways, the key level will be if we can get back above the 671 level, we get a close on a weekly basis above that level, we should start to see some new objectives and this move up to around the 800 to 840 level, I think, on the upside. This high that happened way back in January at 884 could be challenged on this next run, but it's going to take several weeks for us to get there. Next one is Alibaba. This is an interesting pattern. It's been drifting lower for a while. Just to take a look at this fairly closely, and like I said, I'm sticking with the weekly charts on this. We're looking at from the grid standpoint, S2 204.57, low 203 and change, 203.24, high 211.85. So basically have done an R1 S2 this week. But the pattern is suggesting with the PPMs turning up on both of these, cutting through their first, second derivatives, they're still negative, but it does suggest that we're likely to move up toward those moving averages, which are 21, 21, 21. I'm sorry, 21, 21 would be the target. Once we get above 20, I'm going to get this right, 221, and the 10-period moving average at 214. So that's going to be your pivot number. We get above 214. We're pretty close to that. Then you should see this thing move up. But overall, I think this stock has bottomed. We hovered right around the 200-week moving average, and now we're starting to see the PPMs turn up. So look for higher prices, and ultimately we might get above the 221 level, head toward 235, 240. I chose to cover the GDX tonight, which is the gold miners ETF. And the reason for that, it just coincided so well with the analysis on gold that I thought it was worth covering. We have a lot of resistance on this ETF just overhead. And we're starting to see on PPM2 where it's suggesting that we're moving this market higher and the pattern starting to bottom. But it's going to take a close over the 36 handle to really get this thing going. But I think there's a low in place here, and the configuration suggests we're likely to go a little bit higher in this pattern, but there'll be resistance between 30 and 30 and 35 is going to be the big resistance. Let me get that number right. The resistance is going to be 35 to 50 to 36. That's your big resistance. We should start to move up in the grid toward that 34, 35 level. Next one is Boeing. Boeing has just really been tough to trade. I talked about this, and I don't think I have the right account up on Portfolio Expert to show you. I might be able to get to it fairly easy. If I can, I'll show you. But basically, Boeing's been just getting whipped around here, buying and selling. It traded up to its 200-day, which was the original objective. We go back to last year when it was take advantage of Warren Buffett's mistake that he made. We're definitely seeing this thing played out. And just know, and I'm going to throw in here UAL to go along with this, because UAL had a good day today. But just know this is like one of the worst businesses there is, especially after the 737 MAX situation. This is a tough business. Anything with airlines, it's just a tough business. And what we're getting to is really back to normal on these things. So let me just bring UAL up, because I looked at that earlier. It's the same kind of pattern. It's trying to bottom here. Whether it's bottomed or not, I'm not even sure it matters. There was a lot of excitement last year. There was plenty of opportunity in here, and it just doesn't look very good right now. We've got negative PPMs, minus 1.33, minus 40, which are big downtrends. And all that tells you is that there's massive resistance at 53, 54 on UAL. So these are not stocks to really play with. In our Warren Buffett strategy, we had 9 symbols in there, 100% in cash. They've been in cash for a number of weeks now, so they're just out. So if you're a Wavetech user, I don't know if you have that strategy. You certainly could build it pretty easily. It would take you just a minute or so to put that together. But the patterns are just not good here. Airlines are a terrible business. They got expensive parts, expensive equipment, unions, and lots of expenses everywhere, and lots of government regulations. Not somewhere you want to hang around for very long. They've never been really good plays. Just from time to time, there was opportunities, and certainly last year that was one of them. So the final company I'll go into is Caterpillar. Caterpillar traded down to its 200, around its 200-day, also at the weekly 40-week average. We traded down, that average is 206.37. We traded just below 200 at 199.23. We look at the market grid. We actually printed almost right on the market grid. 198.97 was STX. The low was 199.23. So we're right there. And now we've rebounded. So we're starting to see some traction here, but we're in negative PPMs on this. The absolute best that you could expect for this is that maybe you can trade back to around 218, maybe 222 on this. And the key will be the low that we printed here at this 199.23 is going to be your key pivot number on the downside. So, folks, I'll come back up here for a minute and bear with me on the camera setup. But you know, this is what I want to do on these Wednesday nights. I'm trying to keep everything down. I'll spend a couple minutes. I'm going to do, as I told you, I'm going to do Bitcoin and Ether right now, and then we'll probably close this out tonight. I know there's a lot of stuff that you folks would like to do. I'm going to try to, I was thinking about it today, I'm going to try to get some time to do one of the big live sessions on a Wednesday, maybe next week. I'll let you know as soon as I can get a handle on that. So let's go and do Bitcoin. Bitcoin's trading pretty well, actually, and I want to go over to the daily real quick. We're getting really close, I think, to a bottom here. we tried a trade from the logic for a couple days. We got out, and now we're getting actually a move above the market grid. The market grid for today has been blown up. Now this will update tonight at midnight, so there'll be a new grid, and I expect the grid to turn up, and we should see it move up toward where we're trading right now. You can see the high has been 32,800. 32,947 is the 21 period moving average. Good above that, then 34 is a big number. I think the one thing I did want to talk about on Bitcoin is I think this upward sloping 200-day moving average is going to act as a magnet, and we should see this thing start to trade up between 37 and back to 41,000. Not going to happen overnight, but we should see it move up there. Let's take a look at the weekly, because I think that will help us define this just a little bit better. And I've talked a little bit, but this is really encouraging what I'm seeing on the PPM. So PPM1 is down big numbers, minus 3.04. So that's a big downtrend, but we're seeing it cross to its first derivative. It's actually its second derivative. And this is telling us that there is a potential for a bottom here. We also, that 40-week moving average is very similar in how it's the formation as well as the 200-day moving average. They're very similar calculations oftentimes. So we're looking, once again, that's for a move up to that 37,534, and that's what I was talking about, a move to 37,5 to around 41,000. Looks pretty good at this time. Ultimately, if this sets up the low, we should move back and do a retracement of this decline. We did get a while back, we did get a sell signal on the dailies at 55,000, and we've only done one buy since then. So I'm looking for a buy in the daily. If I see something like that, I'll mention it on maybe tomorrow night's live stream, and we'll see what happens there. Next, I'll do Ether. We'll start with the weekly and go backward. Ether has similar pattern, similar issues. We got PPM1 is minus 8.40. So major resistance coming in at 2192. We traded up to 2033. It just kind of stalled right there. As we look at the grid for today, 2095 was R2, S1 1810, S2, there we go, 1708, the low 1718. So it was an S2 working on an R2 kind of range for, this is a weekly, and we might print up as high as maybe an RXT number in this pattern, but I don't think we're going to get above 2192. Probably 2095 will be around the peak for this week. Let's take a quick look at the daily. On a daily, we're right in the range right now. We've had a high of 2023, as I just mentioned. The R2, 2037. We had a low of 1940. S1, 1908. So we've got an S1, R2 on a daily basis, but we're also seeing these PPMs turn up on the daily as well on Ether, and I think that is going to be key to understanding what the next movements in this market is going to be. So anyway, folks, I really want to thank you for showing up tonight. I don't know if you have any questions. I really don't want to cover any more individual stocks. It's just going to take too long to get into there. So we'll probably just call it quits here. So anyway, folks, yeah, I think we're just going to do that. We've been on for 45 minutes. I want to keep these things reasonable. We'll get them tagged up and marked up here shortly. So thanks again for watching and participating in the channel. And continue to let me know what you think about the format and anything else I'm doing, because you guys as critics for me really help me a lot. So thanks again for watching. Have a great evening.